Imagine earning 12% yields and 148% gains. If you're anything like me, your initial reaction is probably something like, sign me up. But wait, there's more. Imagine you're earning 12% yields, 148% gains, and paying almost no taxes. Well, keep listening, because if you think Mitt Romney gets a sweet tax deal, what I'm about to reveal will shock you. Fellow taxpayer, when a reporter asked Mitt Romney during the primaries what his tax rate was, he guessed probably closer to the 15% rate than anything. Everyone freaked out like the guy was getting away with murder. But I just scratched my head. Why was he paying so much? If average Americans are angry at the idea of rich guys like Mitt Romney paying only 15% on their income, then average Americans need to wake up and get smart with their money, because they could be using a publicly traded, perfectly legal investment loaded with such heavy tax breaks that it blows Romney's 15% out of the water. In these days of 1% CDs, it's tough to find a yield worth getting excited about. Sure, plenty of taxable bonds and blue chips pay 4% or so, but what do you have left on April 15th? That's what makes the investment I'm talking about so special. Taxes don't matter because you can keep everything you make. I don't find situations like this every day, so you might want to pay attention. I'm not talking about muni bonds paying a piddly 3%. I'm talking about cash cows that yield 8%, 9%, even 10%, and which have quadrupled in price since the 2009 market bottom. They're also surprisingly safe, 82% less volatile than the average stock. In other words, they don't jump all over the place while making you richer. Let me give you the story behind double-digit yields and no taxes. It starts back in 1986. With Ronald Reagan in the White House, Congress passed a sweeping tax act that included a barely noticed giveaway to the energy industry. Washington wanted to speed up the development of domestic energy resources and encourage investors to join the party. What happened next was unprecedented. In effect, the government exempted a certain class of energy-intensive companies called master limited partnerships from corporate taxes. That's right, MLPs pay no corporate tax in a country with the second highest corporate tax rate in the world. Hard to believe, but true. And that's not the only break you get with MLPs. For example, you don't buy stock in an MLP. You become a partner. But you're a partner who doesn't have to come to work, attend meetings, pay taxes, or deal with any of the hassles of a conventional partner. But you do get paid, and very well at that. For the millions of retirees who once lived off income investments and now find it impossible, these partnerships have come to the rescue. You can pocket $10,000 a year for every $100,000 you put into these cash cows. And you can stagger your payments to come in monthly, so it's convenient to pay monthly bills. As an added bonus, your personal taxes are so low that you'll think the IRS has gone soft in the head. Thanks to depreciation, 80% to 90% of the distribution you get from a typical partnership is tax-free until you sell. In fact, some partnerships let you pocket high yields for 10 years or more before you pay a single penny of tax. One of my favorites yields a nice 10.3%, and 90% of your income is tax-free. Try to find a muni bond as generous as that. You don't have to be Mitt Romney or Warren Buffett to pull this off. You don't even have to be in a high tax bracket. You do, however, need to be a little bit smart. You don't buy shares, you buy units. You don't get dividends, you get distributions. You don't report your gains on a Form 1040, you use a K1. But if you can deal with these few simple wrinkles, you get a huge payoff. Now, before I go on, I just need to stop 1 minute and say, I'm not sure how much longer this free presentation is going to be available online. The information I'm about to divulge is not really something the IRS or the guys on Wall Street are too keen on me disclosing. So please watch it through to the end now while you still can. It's not that long, and believe me, you'll kick yourself later if you miss this. Okay, so back to what I was sharing with you. When Congress gave the green light to tax-free partnerships, it was mainly to promote investment in midstream energy assets, the pipelines, storage tanks, terminals, and ships that move energy from producer to user. Since they profit from the constant flow of energy, midstream MLPs let you milk a steady stream of profits no matter what energy prices do. I don't know if oil will be $50 a barrel or $150 a barrel a year from now. I can't tell you how much coal or natural gas will be selling for either. But I can guarantee that we'll almost certainly be using more of all three. In other words, these midstream MLPs are a pure play on the growing demand for energy, which is why they've provided a growing income stream for so many years. Here's another thing I think you'll like about MLPs. When you own an MLP, the interests of the people running the show are the same as yours because you are all owners. Management has a genuine incentive to run their operation as profitably as possible. If the MLP loses money, they lose money too. How many times have you bought a stock, watched it sink, then seen in the news how the miserable jerk of a CEO hauled in a 7-figure bonus? That has never happened in an MLP. These guys are the most disciplined managers I've ever seen. You won't find any of the showy, wasteful, ego-driven moves so much of corporate America is guilty of. Since a distribution cut would hurt a partnership's unit price, management is extremely prudent with its cash. As a rule, they keep 5% to 20% more cash on hand than they need for their distribution. Of course, their job is made easier by MLP's stable cash flow. During the last recession, one of the sharpest in our history, the consumption of petroleum products barely budged, and the cash kept flowing to partnerships. No wonder the typical MLP's earnings volatility is less than a third of the S&P 500's. Unless the managers are real boneheads, you'll keep getting those fat distribution checks every quarter, no matter what the economy does. If you like utilities, you'll love MLPs. Partnerships aren't regulated by states, but by benign federal overseers who encourage management to innovate and cut costs. These savings are then passed on to investors. This is far different from traditional utilities where gains from efficiency and cost cutting must be rebated to the public in the form of lower rates. Combine a cash-heavy operation with generous tax benefits, and you have a formidable business model, one that has paid off well for investors. Over the past 10 years, MLPs have doubled the stock market, rising by 148% to the S&P 500 73%. One of my favorite producers stores and transports natural gas throughout the nation's midsection. Its price has gone up by more than 8 times since the market break in 2008. When you see returns like that, you might think you've missed out and that it's too late to profit. But I wouldn't worry about that because this asset class is still in its infancy. Add up the market caps of every public traded MLP in the country and you'd still be $100 billion short of ExxonMobil. What's more, looking at PE ratios and other valuations, MLPs are still cheap compared to alternative yield plays like utilities. And investing in new energy infrastructure, such as pipelines and storage tanks, is growing fast. So the fundamental underpinnings that have yielded years of outperformance remain solidly in place. Huge yields are just the start of the story. An investment throwing off a 10% distribution is enough to make most people happy. But plenty of partnerships have also grown impressively, creating huge capital gains. Let's say you put $25,000 in Enterprise Products Partners at the start of 2000. By now, you'd be sitting on $357,125 and collecting $17,116 in annual distributions, a 68% yield on your initial investment. Enterprise is by no means an isolated example. A well-run partnership can rival the growth of a high-flying tech stock. Take Kinder Morgan Energy Partners, for example. It was worth barely $130 million at its birth. Today, it has a market cap of $28.5 billion. Think about what this means. Kinder Morgan has returned 90% of its earnings to shareholders over the years, and it has managed to grow 219 times bigger. This is the kind of growth that investment legends are made of. Since its inception, Kinder Morgan has increased its quarterly cash distribution 44 times in a row, from 8 cents a unit to $1.23 now. And its unit price has risen from $5.75 to $82.20 for a 1,329% capital gain on top of its regular distributions. Enterprise and Kinder Morgan are both great companies. I own them both, in fact, but they're now so big that their fastest growth is behind them. If you're after growth, you'll see 9 MLPs in a minute that should grow a lot faster here on out. And they yield up to 9.3%, so you're not giving up on income either. Take a look at my current picks and see for yourself. Up 183%. This Denver company does just about everything you can do with natural gas: gathering, processing, transporting, storing, and selling it. It's also perfectly posed to profit from rising shale gas production. I've owned it for almost 3 years, and it's kicked out a 183% total return. 13% yielding market leader. I hit a home run with this owner-operator of dry bulk ocean tankers. The company is turning into a dominant force in the shipping industry. Its vessels are relatively new and therefore fetch better than market rental rates. More important, its cash flow is locked in, with 92% of its capacity contracted for 2012 and 74% for 2013. I'm up 107% to date and pocketing a 13% yield. A big-time Bakken shale player yielding 8.1%. Unlike most MLPs, this one is a producer of gas and oil, not a transporter of it. So it's more vulnerable to price fluctuations than other MLPs. In fact, it has hiked its distribution by 65%. To date, I'm up 140%, or an average of 47% for each of the 3 years I've owned it. The heavy lifter transports gasoline, diesel, and jet fuel through 8,400 miles of pipeline and owns 180 bulk terminals handling more than 87 million tons of coal and petroleum coke. Up 94% since I invested, 8.1% current yield. I'm urging readers to buy even more at these prices. Pretty impressive. I agree. You can count on one hand the number of investment advisors in the world who can make that claim. I've been at this game for a long time, and I've looked at every income investment under the sun. But MLPs stand out from the crowd. With their steady growth, fat yields, and hard-to-believe tax advantages, MLPs impressed me enough to start a new advisory service to spread the word about them. So in 2009, I launched MLP Profits to identify the best opportunities in this field. I figured there had to be plenty of other tax-hating investors like me who would want to subscribe. Now I'm bringing yield-hungry, tax-averse investors the most reliable, steadily growing master limited partnerships I can find. If there's one word for my web-based advisory service, it would have to be comprehensive. There are 89 publicly traded MLPs in the United States and about 30 more on foreign exchanges. If you jump blindly into this group, you're likely to run into a few nasty surprises. MLP Profits gives you a handful of the healthiest. Why roll the dice when you don't have to? My service takes the guesswork out of choosing a high-growth, high-yield partnership without any hidden liabilities that could trip you up. Your job is to sit back and relax. I sift through every MLP on the market and zero in on the handful of the best. I vet each company personally and rank them all every month in my How They Rate table. The moment you accept your risk-free trial to MLP Profits, you'll have 24/7 access to every bit of my research. I'll set you up with a password that lets you into my private, secure website, jam-packed with my latest analysis, advice, and recommendations. Every time you log on, you'll find in-depth report of the month, over 30 pages of industry analysis and advice on the timeliest partnership sectors. When you realize how wide the spectrum of partnerships is, you'll see there's one that's right for every investor, aggressive to conservative. How They Rate table. Here I rate all 89 MLPs trading in the United States with a buy, sell, or hold so you can compare them all at a glance. I look at the percentage of income generated from fees, its payout ratio, the debt-to-capital ratio, and its prospects from distribution growth. I include the good and the bad because sometimes it's more important to see what you shouldn't own. 3 market-beating portfolios. Choose from aggressive to conservative to growth to build your own ideal mix. I put every MLP through my proprietary 4-point safety rating system to make sure your distributions are safe. And it must be working because 11 of my 22 total holdings are now up over 100%. Here's how my picks break down right now. 5 aggressive income picks with current yields up to 12.5% and total returns up to 116%. 8 conservative income picks with current yields of up to 8.6% and total returns up to 207%. 5 of these 8 picks have already doubled. 9 growth picks with dividends from 6.2% to 9.3%, average returns of 86%, and plenty more upside. Complete fund coverage. As MLPs grow in popularity, so do the number of vehicles for investing in them. I give you buy, hold, sell advice on every close-end fund, ETF, ETN, and mutual fund in the MLP arena. Email flash alerts. Whenever there's breaking MLP news, I'll pass it on. I'll also occasionally send you buy or sell signals when I can't wait for the next issue to act. Live reader chat sessions. Every other month, I sit down for a few hours to answer your questions in detail. Whether it's broad energy trends or which MLPs I like best at the moment, nothing is off limits in these interactive free-for-all sessions. Back to the beginning newsletter archives. The moment you join, you can access every bit of advice I've doled out since I launched MLP Profits. Plus, you'll enjoy immediate access to all our events, videos, and special reports. It's as if you'd subscribed on day one. MLP Profits Monitor Easy. This informative bi-monthly bonus analyzes emerging developments in the MLP sector and relays news updates on portfolio holdings. As you can see, I put a lot of work into this service. There's no official clearinghouse of information on these little followed securities, and I have to dig hard just to find some of these partnerships. In fact, MLP Profits is the only publication that tracks down every single one of these hard-to-find cash cows and covers them all in one convenient service. Despite the extreme level of detail I go to, I try to make the service affordable to everyone. A year of MLP Profits, 12 months of advice, along with 24/7 updates and buy-sell signals emailed with an instant of our investing decision, normally costs $697. Most members will earn that back in their first trade. But today, I'd like to try something different and offer MLP Profits on a low-priced quarterly basis. Take 3 months to test it out. In the meantime, I only ask for a fully refundable $147. If you don't like it, just let me know in the first 90 days, and I'll return 100% of your money instantly, no questions asked. If you prefer a traditional annual subscription as a first-time subscriber, your price is only $497. That's $200 less than the masthead price. Also, 100% fully guaranteed. No matter how you join me, you'll also receive a package of special reports I prepared to get you off to a running start. Report number 1, Ultimate Tax Shelter for Income Investors, and report number 2, MLPs, Conservative Cash Cows. With your permission, I'd like to send you these 2 special reports free just for giving MLP Profits a try. Just click the orange button below now to start your risk-free trial. I'll rush you your 2 free special reports immediately, and remember, the risk of trying MLP Profits is 0. If over the next 3 months you're not satisfied with the money you're making, I'll send you a 100% refund. After that point, you can still get your money back on the balance of your subscription. The special reports are yours to keep free no matter what. Join me today and tell the IRS to take a hike. Taxes are a funny thing. We all do our best to minimize them, but it often bugs us when other people do the same thing. If Mitt Romney wants to pay 15%, fine. But as I've pointed out today, there's no reason a wealthy guy who lives off his investments needs to pay that much. Not when Congress has designed a program practically begging us to pay less and using solid investments that yield more than any regular stock or bond around. So why not check it out and see what you think? MLP Profits is an elite investment alliance, not a mass circulation service. So it might or might not be right for you, but you won't know until you try it, which is why I've made it easy to give it a shot. I'm inviting you now to take 3 full months to look over all my research and use MLP Profits before you decide to continue. Put it to your own personal test. The tougher the better. Go ahead and sign up. Use the product, read every article, pick apart the research, look over my How They Rate chart. Buy some of the recommendations and see how they do. I guarantee you won't be sorry, especially once you start collecting checks from your mailbox. 3 minutes from now, that's all it takes to get up and running online. I think you'll see these unique securities can earn you substantially more income in the coming years than you'd ever make in conventional stocks. And you will certainly keep more of what you make. And remember, with our 0 obligation for 3 months, it's like trying the service for free. And you get to keep Ultimate Tax Shelter for Income Investors and MLP's Conservative Cash Cows free no matter what. You have absolutely nothing to lose and quite a few profits to gain. Click the orange button below now to start your risk-free trial. If for any reason you decide it's not for you, simply cancel for a full 100% refund, no questions asked. One last thought. Warren Buffett says he shouldn't pay a lower tax rate than his secretary. Why not? I do, on my investment income anyway, and now you can too. Start your 90-day risk-free trial subscription now. Just click the orange button below to get started. Hi, still watching? Still deciding? I know, we've all been told our whole lives, if it seems too good to be true, it probably is. And I don't blame you for being skeptical. There are lots of hucksters out there. Let me assure you, though, this is not a pipe dream. MLP Profits truly is a risk-free offer. If for some reason it doesn't meet your expectations, all you do is pick up the phone and tell us you'd like to cancel. Simple. No hassle, no questions. 100% of your money is returned to you. The only catch, you have to call us within 90 days. Simple. And even if you call us to cancel after 90 days, we still refund 100% of the balance of your subscription. Try the 3-month trial. It's like getting MLP Profits for free. Again, all you have to do is cancel on or before the 90th day. Zero risk, zero obligation. Read the newsletter, buy some of the recommendations, watch your profits grow, and collect a few checks in your mailbox. I guarantee you'll never look back. Now, I want to tell you, and I hate to boast, my publications have the highest renewal rates in the publishing business. My readers trust me. And why shouldn't they? I treat them like family. I don't recommend anything I wouldn't buy myself. And actually, I do, in fact, put my own money into my recommendations. Yes, I have skin in the game. If my readers didn't make money, I wouldn't have 500,000 readers. And, well, frankly, I'd be out looking for a job instead of talking to you. So what have you got to lose? Nothing. Click the orange button below now to start your risk-free trial subscription to MLP Profits.